Welcome to Regulation Asia's video interview series. My name is Nick Wakefield, co-founder of Regulation Asia. Today, I'm sitting down with a team at Accenture to discuss all things financial crime. Accenture is a leading business transformation company that helps organizations digitize their operations, drive innovation, and gain competitive advantage. They have been integral to many significant developments around the region across the financial risk management and regulatory compliance landscape, including most notably the recent Cosmic platform in Singapore. I'm joined today by two of the firm's senior leaders based in Singapore to share insights and discuss the work they're doing. Irene Liu is Managing Director and Finance, Risk and Regulatory Compliance Lead for Southeast Asia, and Catherine Lee is Managing Director, Risk and Compliance Lead for Southeast Asia. Thank you both for joining us today.
Glad to be here.
So let's dive straight in. We've seen increasing regulatory focus on source of wealth due diligence, particularly in light of new guidelines introduced by the AML CFT Industry Partnership, otherwise known as ACIP, in Singapore. What are some of the practical difficulties banks are facing today in meeting these requirements, and how are they currently coping with those challenges?
So maybe I'll start, right? So talking about the ACIP, so these new guidelines actually talk to the best practices in relations to the risk and wealth management industry, such as, for example, the identification of the ultimate beneficial owner, or the complex multi-jurisdiction kind of a transactions that is taking place quite regularly these days. So on the back of the $3 billion financial crime, ring that was actually, quite infamous in the market. So what has the banks been doing? So they have come up with this ACIP kind of a guidelines. And yet what we see is it's not for the lack of these policies or processes, documentation, but rather I find that there is a lack of experiences out there in the industry whereby, there are a number of cases that needs to be remediated. And in fact, on top of that, there's also an increase in the backlog of work that needs to be done as well. But then there's a great disparity in terms of the people who are doing the work, performing the work. And so, the kind of experience that they have and skill set that they have is also, inconsistent within even one financial institution, even within one team. Secondly is, of course, the lack of a workflow tool as well. I think, a lot of times, the banks would tell you, right, there's people working on it would tell you that, they have about, 10 systems to work into. And whenever they need to collect data, they need to compare information, they would have to extract data from different sources and then impute the information into disparate sources as well. So this makes the workflow from, the line 1 to line 1.5 to line 2 and then back to line 1.5 a lot more difficult and a lot more time consuming. Finally, it's also the fact that, such cases especially, for example, source of wealth, corroboration, it's very unique on a case-by-case basis as well. So it requires people with the right experience across different levels, like I mentioned earlier, and to have the relevant training in place. But again, with the current, kind of a vibrancy in the market on, the need for such resources, people have been moving around, and therefore the training with respect to the bank's relevant policies and processes may be perhaps not as adequate and not as given as timely. So these are some of the difficulties I find, that the banks are having. Can anything else add?
I think just to add on with that as well, it's also the whole scale of trying to deal with all of these cases. And when you've got like maybe a big team of 30 people trying to deal with 10,000 cases at a time, managing consistency across the handling and all that will also be challenging, especially when some of these source of wealth corroboration, as an example, could be quite subjective, in terms of the evaluation. And so I think a lot of our clients now are looking at how we can use new technologies like AI and agentic AI as well, that to help improve the processes around all of this. So we will talk a little bit later about maybe things like agents, the latest and greatest versions and all that out there that can help to handle. But things, it starts off with the fundamentals of even things like data. How do we, handle the whole data extraction at scale, interpreting, transposing and understanding what's the data, classifying it properly, and actually, getting it into the identification and evaluation process as part of it as well.
In fact, we also are working with the financial institutions now, right? Looking at uplifting their AML capabilities across a few areas. Namely, for example, if let's say, for example, some of these core engines, upgrading some of these capabilities. Number two is also looking at uplifting the data capabilities as well, whether or not they have timely data, they have complete information that they need for their corroboration of information, or even including, for example, the implementation of data analytics to help to make sure that they have this information that is the use of data analytics for looking at, for example, entity resolution and looking at some of these hidden networks as well. And finally, even on workflow, implementation of workflow tools that is also we see is a common practice across the financial institutions.
Okay, so you mentioned AI agents, so let's kind of touch on that. Obviously, generating a lot of buzz in the financial crime space. We recently hosted our fraud and financial crime event in Singapore, and certainly that was one of the topics that pretty much came up all the time. Besides helping with sources of wealth due diligence, can you perhaps share some other use cases you're seeing where banks are successfully leveraging AI agents to enhance their AML and CFT efforts?
So if you're looking at vertical basis, I'm looking at, for example, a particular area. So this could be, for example, in terms of name screening, it could be in terms of ongoing monitoring, it could be in terms of transaction monitoring, or even payment screening as well. So that is on a vertical basis. And so, or you can look at the deployment of agents on a horizontal basis. For example, you're looking at data extraction, you're looking at data verification, and so on and so forth. So I give an example in terms of how these AI agents have been deployed. So first of all, if you're looking at, for example, periodic monitoring. Now, in periodic monitoring, you will need to be able to, first of all, update the customer profile information. And that is where the AI agents can actually go to various sources of information, whether or not this is voice recorded information by the relationship managers, or whether or not it is actually data that is actually stored in some of these data warehouses because of information or maybe documents provided by the customers. This could be their passport information. This could also be their annual report information that is also stored. And then what these agents can do is to be able to extract all of this information and to be able to translate them into what I call structured data format. Now, and then from this structured data format, the agents can also then help to actually validate this information and finally assess them in accordance with the policies. When I say assess them in accordance with policies is, for example, let's say there is a change in nationality, and then therefore, if there's a change in nationality of the individual, does it mean to say that there is a requirement for enhanced due diligence or not? What does that mean to the risk of the customer and to the bank, and poses to the bank? So, and then thereafter, the agent can also help in identifying what is the risk remediation that is required. For example, the agent may recommend to say that, look, we need to obtain more information to validate with the customer. That could be one. Or number two is actually to corroborate more information across the bank, whereby such information may sit in. For example, if let's say the customer may have, let's say, some of these loans, or relating to green loans financing, or even credit risk information, this information about the customer can be corroborated across the bank by the agent as well. And finally, we are looking at what I call documentation, which means to say there is an outcome in terms of the risk rating of the customer that needs also to be documented by and summarized by the agent. So the agent can actually, be used in multiple stages across the entire so-called process, periodic monitoring process. And then there's an outcome whereby, okay, do you need to exit the customer or do you need to continue with the customer, but give it a different risk rating? So these are recommendations that could be provided.
We obviously talked about the technology, but obviously data quality is a major hurdle for banks. How important is it having clean, timely, and comprehensive data to effectively deploy AI-powered solutions for financial crime? And what steps can banks take to improve their data governance and data quality?
Well, I think it is such an important prerequisite that if we don't even have good quality data, then no amount of tech advancements can help improve things, right? You're just going to have a lot of a garbage in, garbage out sort of a situation. I think as Irene shared a bit about all these agents and use cases as well earlier, A lot of the challenges that banks face would be incomplete or insufficient data, especially if it's historical one. Because I mean, in the past few years, maybe a lot of times, just a simple example, when you ask for information from a customer, they give you a photocopy or a scanned image and so on. How do we get some of all these unstructured data into a structured format that it can go through all the necessary analysis and so on? And so we see clients actually doing a lot of historical data kind of enhancements. That's one. Getting a single customer view of the customer, apologies, across the different businesses and all that would also be important as we assess the risk of them holistically. And data quality it's always going to be key, because if you're going to have like missing data fields and all that, it will affect the model outcomes as well. So yeah, I think that to me is like a base expectation that's needed.
So Cosmic's seen as a groundbreaking initiative in Singapore to aid in AML CFT efforts. In the year kind of since its launch, can you perhaps share some insights and lessons on how the platform is helping financial institutions better detect and prevent financial crime, while also addressing those kind of data privacy and security concerns that exist?
Right, indeed. So we were in fact helping some of the financial institutions, right, to implement Cosmic, and that has been quite a hoo-ha in the industry, because this is the first of its kind about data sharing, especially on information, right, relating to risky customers and transactions. So in the first year since its launch, what we have seen actually from the financial institution perspective is that first of all, the banks may have their own individual thoughts in terms of, this could be a suspicious transaction. However, with Cosmic, right, they're able to share such information on a much more timely basis with the other financial institutions, and therefore it helps with much faster and earlier detection of these suspicious transactions and transactors. That's the first one. The second one is also because of the fact that, this information is corroborated across different financial institutions on the Cosmic platform. Therefore, there's also a reduction in the duplication of the suspicious transaction reporting as well. And finally, again, because of the fact that, there is this so-called Cosmic platform to corroborate the information, it makes it a lot more effective for the financial institutions to focus on those that are more high-risk customers, to focus their so-called efforts on high-risk customers. So we have seen actually in the financial institutions, right, whereby there is, close to 50-60% of these what I call data or transactions that's being shared across Cosmic that has resulted in actual closures of client accounts. So this means to say that this is actually really working, and that actually the information shared is really pretty effective in terms of, detecting financial crime.
I think the power of networks really cannot be underestimated. And the fact that you could easily have a criminal that says, okay, I know that this bank has a lot of good anti-financial crime sort of efforts and tech advancements in there. What about if I go to another, smaller, less well-controlled, less governed bank and so on? And so I think the beauty of Cosmic is that we can already see visible improvements just with that few banks that are in this first rollout. And I can only, look forward and say, wow, if the whole industry is going to come on board to that, once when you've got that 50, 100, 150 banks and all that, the scale come in and share, I think the results will be pretty phenomenal.
Yeah. In fact, also, right, just now I mentioned about detection measures, right? In fact, Cosmic has also led to some of these additional prevention measures that the banks have undertaken as well. So just think about it, if let's say the banks are saying, maybe 50-60% of the so-called cases that are being shared across Cosmic has led to a closure. What does it spell in terms of the bank's internal governance and controls put in place currently, right? So what this has done is also, the banks are continuing to reflect and to review over their existing controls and processes, and to look at the adequacy of such assurance, in the reviews as well. And secondly, is also to review the risk appetite, right? So, what is a risk appetite? When there are some of these, potential, indicators that they have come across, how did they dispose of this? And finally, very importantly as well, I can't emphasize enough, it's always about individuals who is reviewing these cases. For example, the CDD specialists, right? Are they adequately trained to be able to detect some of these indicators as well? So, and finally, one last part is actual work that's being done. We've also seen financial institutions, took on additional remediation work because, they say that, look, I realize and acknowledge that perhaps, we need to enhance the additional data points that we need to collect to give ourselves some level of assurance. We need to enhance the controls, and therefore we want to review some of these additional cases that could have probably passed by us and that we have not detected those so-called cases as well. So they've also taken on voluntarily additional remediation work to improve their case reviews.
Wonderful, a great initiative. So if we look ahead, perhaps we can discuss some of the key trends and challenges that you see shaping the future of financial crime compliance. How can banks prepare themselves to stay ahead of this ever-evolving threat?
Okay, maybe I should start. Okay, look, we say we know how to use AI, we are using agents, and so likewise are the financial criminals as well. We say we're educated in terms of the financial crime processes. I'm pretty sure they're also very well educated, right, in terms of the processes so that they can actually, be trying to fly under the radar. So we have seen, for example, some of the financial criminals, right, trying to fly under the radar by saying, look, I don't want to go under the umbrella of a private banking customer. I want to fly, as a retail customer so as to escape the rigor. So they know the financial crimes and policies and processes pretty well. So what I see is that, AI, in fact, has been used quite tremendously by the financial criminals to help them with, for example, identity theft, right? Putting in scams, mule accounts, and so on and so forth. So they're becoming a lot more sophisticated. And in fact, whilst we are implementing an AI solution, we've always got to consider what are the governance, what are the controls, what's responsible AI. We create roundtables. However, the financial criminals are not going to go through roundtables on responsible AI. They will implement it straight away after they've developed the product itself. So I would say that, always when you're talking about the use of technology, the abuse of technology, they will be one step ahead. So, and this is where we see an increase in the volume, which you have seen recently, increase in the volume of financial crime. But then it also means to say the banks have to also catch up as well, regulators as well. So maybe it's also in terms of collaboration, such as the use of Cosmic, right, in terms of data sharing. But Cosmic is only 6 banks in Singapore. Now, what can we do better? It's probably across the financial institution and industry, right, on a wider scale. Number 2 is not just restricting this to the financial industry, maybe to look into maybe other industries as well, telco industry, the media industry. And then finally, not restricting to one country. Financial criminals are getting smarter. They are never operating only in one country. In fact, the money leaves the grounds right pretty soon after the money is received as well. So this is where I think, we have to also do better.
Yep. I think scale is going to continue to increase a lot. And banks will, like it or not, have to adopt the new technologies fast. And if they're still thinking about, can I get my business case up to invest in this space and all that, then they are probably, months or even years behind some of the other peers and all that. I think adopting the new technology is no longer an option. It's going to be necessary to stay ahead. Or even to keep up with the pack, right, to be fair. I see an increase for industry collaboration, whether it is at policy or guidance kind of level, like what we see with Cosmic as a platform, Project Mindforge as an industry initiative to come up with operationally ready kind of a guidance and handbooks. And moving forward, perhaps even, we might even see a scam detection utility or something. So I think the power of network, I can't emphasize that enough in terms of we can't have all these anti-financial crime efforts in silo organizations' view. It needs to be, collaborating with others in order to circumvent and to even have a chance against the speed at which these transactions are flowing through our system.
And to be honest, right, I think just now, Nick, you're also asking a question on data. I also kind of emphasize the importance of data as well, because, the power of data is that we can unlock quite a lot of hidden information inside it. I have seen, for example, just within a 15-minute period, right, without any transaction information, we are able to draw the linkages across the different parties by just purely imputing information such as where they live, the information on the on the $3 billion financial crime criminals, those that are in the ring, information about where they live, information about their common shareholdings, for example, and not just that, right? Or not just within Singapore, but outside of Singapore as well. Now, this information, when it's corroborated within even one financial institution, let's not talk about even corroborating across others yet, within the financial institution, allows you to be able to detect hidden networks that they have not declared to you. So, for example, a husband and a wife living in the same address, using the same email address, for example, that they did not declare to you, but because of such information that you have within the bank, now you can then now detect this via network linked analytics. So then, therefore, for you to be able to do that, obviously, it requires you to have good quality data. So it comes back to just now your original question, right? What is the importance of the data itself? So, and this is where are banks doing sufficiently to so-called pool together the data that they've collected? Or are they still in silos? Oh, this is in your business unit, this is in private banking, this is in retail, this is in corporate banking, institutional banking, and so on and so forth. And if such information is not corroborated as one full so-called suite of data points within one financial institution, then it becomes even harder for us to detect as well such information.
I think adding on to the point on data, right? A lot of banks are probably also looking at how to enhance their whole overall data pipeline to make sure that the infrastructure is there in place to deal with the increasing demand for real-time or near real-time sort of data. So the timeliness of getting the data from your transactional systems all the way through to all these analytic systems, the demand is increasing for speed as well as the quality and accuracy of that. So yeah, I think fundamental, data is going to be very key in order to enable all of this.
Absolutely. But some very good progress being made there, obviously, from what you were saying. So that's great. So let's wrap up for today. Obviously, a fascinating conversation with you both. Thank you very much, Irene and Catherine, for talking to us at Regulation Asia today about this very important topic. Obviously, for more information on Accenture, you can visit their website, www.accenture.com. And as always, to keep track of regulatory developments for APAC financial services, visit Regulation Asia at www.regulationasia.com or follow us on LinkedIn or X. Thank you very much for joining us today, and we'll see you next time.
Thank you.
Nick.